Let's connect with Vinod Karki as well. He's head of strategy at ICICI Securities to find out his outlook for the year ahead. Vinod, good to have you on board, and just sort of taking off from where Devina left off. One of her overweight sectors includes, the big CAPEX theme and capital goods as a whole. And I see as part of the top picks, L&T, Siemens, BHEL, Thermax, Astral, etc. feature on your radar as well. So let's understand what the long-term view is on building up on the entire CAPEX and manufacturing theme.
Yeah, good morning and thank you. So if you see the CAPEX cycle, it peaked out somewhere in 2012, and then from there, the gross fixed capital formation as well as the industry credit, retail credit has been doing pretty well, has been on a downhill. Over the last year or so, we have seen this turnaround led by a lot of announcements around new capex from large industrial houses and also the real estate sector picking up. So that's a large component of the gross fixed capital formation. So overall, we feel that the investment cycle after a decadal downturn is just on the cusp of reviving. Usually it lasts several years. So I think the both industry credit and industrial capex, along with real estate development, which is a large part of, as I said, the investment cycle, all are turning. So I think these sectors and those companies related to these sectors will do well, will outperform in going ahead. That's the thought process.
Large part of the capex is also driven with the underlying demand trend in the commodity. For example, if commodity prices are heading higher, cement companies would start capex, metal companies would start capex. But at a time when exports are slowing down and globally we are fearing a recession, and if commodity prices they come down, could that have an impact on large capex plays? Cement sector capex, steel sector capex, power sector capex?
Yeah, so there are two angles to this. One is the demand, as you said. So we don't see any issues with the domestic demand for all these commodities. Globally, there could be some shakeup, but you have to remember that China will open up. So it will kind of balance out. But the more important thing is even if you look at the prices themselves, they may have corrected from those high levels that we saw last year due to the Ukraine-Russia conflict, but they are still elevated compared to the pre-COVID period. So the realizations are not as if they will run into losses. And they have been under investing for almost a decade now. So, and capacity utilizations are rising. So the other point is capacity utilization, how it's moving. And for some of these sectors like steel, cement, and all, it's pretty high. And if domestic demand continues to the way it's going up, and we see the demand being led by investment cycle in the domestic economy, I think the underinvestment of so many years and some of the balancing on the global front will see to it that these capex plans that some of these large corporates have already announced, they will follow through, especially given their balance sheet and the cash flows that they are generating right now.
Could you give us a flavor of valuation in some of the cyclicals and some of the industrials? The broad estimates are that a stock like ABB, Siemens, these stocks are trading much above the average valuation. I'm bringing this point out for the benefit of our viewers because when the cycle will start, initially the P multiples will look high. So can you elaborate more on that point?
Absolutely. So that's absolutely right. See, these are deep cyclical companies, the capital goods and all. So if you look back, it was a period of low capital intensity. The capex cycle was pretty low, subdued, and earnings obviously will look subdued. And then if you, looking at the past, you will not get any sense. And as we know, we are at the initial stage of announcements of capex. The capex has to hit the ground. Typically, it takes a couple of years to hit, and everything comes at one point in time. That's the nature of cyclicality, right? So all these large corporate industrial houses which are announcing will hit the capex on the ground simultaneously in a couple of years. So that is where this whole, and then you will see these capital goods companies, demand and earnings really flare up, which again is a mistake by investors. They tend to extrapolate that, thinking that that's a secular trend. It doesn't happen that way. So that's the nature of cyclical companies. So earnings won't, looking at past earnings won't give you much analytical insights. You have to gauge whether you are at the earliest cusp of recovery of this investment cycle. If it is, then earnings can significantly rise and past multiples will not hold. In the sense, the earnings will significantly rise to support those valuations.
You know what I'm most intrigued about looking at your portfolio right now, Vinod, is your bullish call in discretionary consumption. I mean, at a time when we're talking about inflationary headwinds and consumption at large witnessing a slowdown, discretionary spends is something that you continue to have conviction on. Tell us, A, what's the rationale and what stocks do you think are going to, aid this kind of a boom?
So discretionary consumption and largely consumption, if you break it up, there's a dichotomy in India, actually. So there is this a small segment, which is around 11-12% of the workforce, which is in the formal sector. Now, due to formalization and the wage increase that we have seen in terms of salary surveys and all, more number of people are getting into the formal workforce and their wage growth is also happening. So this segment of the economy, which is the formal corporate workforce, that's actually rising faster than nominal GDP. The remaining 85-88% of the economy, neither is their wages increasing much, they are also hit by inflation. So that's why. So which are the large ticket discretionary consumption for a household, which surplus money? It's basically houses, cars, travel, tourism, and all this. If you look at each of these factors across the six major cities, if you see house absorption at the higher end, it's rising. The luxury cars or travel, tourism, all these aspects. Unfortunately, it is a small part of the overall economy, but it's decent enough to cater to these kind of industries. So it's not one size fits all for consumption. There is this pocket of, that's why I use the word pockets of discretionary consumption, where the income growth and surplus income is higher. And that's why you're not seeing any slowdown for these companies when they talk about their quarterly earnings and the demand. It continues to look quite robust. But on the other hand, mass consumption, low end consumption, there you continue to see the challenges, right? So I think you have to look at it this way, that this 11-12% of the workforce is doing pretty well. They are willing to consume, and they have the means to consume. And their population is growing at a rate faster than the nominal GDP. But the larger section, the big weight in the economy, that is still quite sluggish, hit by inflation, and that's why you're seeing this dichotomy in consumption patterns. You're seeing it across companies.
I completely get that, but it's an interesting mix of names out there, right? So you've got an ITC, you've got a Jyoti Labs, and you've got a Sapphire Foods and Jubilant Foodworks. Tell me why a Jyoti Labs and then ITC at the other end.
So I'm a macro strategist. These are our. So I selected from our sector teams, whatever their top picks are. But broadly, wherever we have an upside, the analysts see an upside in those companies, and they fall within my area of discretionary consumption. We have selected those companies. Yeah.
Okay. What are the chances that because of good crop, little bit of interest rate effect waning away, rural economy could make a comeback?
Yeah, so I think rural economy, the big structural move will be only when more of the organized more of like the food processing industry, more of industrialization. So if you may say, because the just by good monsoon or small income bump up, that doesn't structurally change the nature of the rural economy. It has to be more of high value added productivity increase in the rural space to really, take the rural landscape into a higher trajectory. So I think those are the steps be it some policy initiatives where corporates invest in rural areas, where whatever is the strength in terms of either providing labor or land or any other asset which is more productive. So that will be the structural thing. I mean, good monsoon and good output and some MSP hike and all will be short-term, what you should say, bump up, but it doesn't structurally change it, basically.
Completely get that. Vinod, great to have you on the show and wish you a happy and healthy and prosperous 2023 from all of us.
Wish you the same. Thank you so much.
Thank you.